Good morning. Welcome everyone to the Hurley Investments Happy Halloween Trade Findings and Adjustments. My name is Kevin Hurley. I'm going to turn off a webcam and let's get going on what we're going to share today. Right off of the bat, I'm going to ask you what's happening in our markets today, 10/31/2019. I can show you an example here. If you look down in that lower left-hand corner, we have a pretty easy example to see of what's happening and why. So someone please tell me what's happening in our stock market today and why. What's going on in our stock market and why? All right, so I see, Lance, you obviously have been watching CNBC or Bloomberg, right? Chicago PMI is down today from already expansion, contraction numbers. So I heard that too. And a lot of people ask me, well, Kevin, why do you start going into the market? Why are you talking about the market before you start telling us a trade, right? So if I was to show up my webcam, show you who I am, right? I'd look at you and I'd give you that stern look. Why wouldn't you understand what's happening in your market before you place a trade? It's a no-brainer for me, right? If you don't do your due diligence, you won't know what the hell you're supposed to do. It's that simple. So let's take a look at ISM. If I take a look at it, it's not a red number. It's not something that has a lot of pull. It's an orangish, right? In fact, more importantly, you should have seen or understood personal spending was more important, initial jobless claims, personal income, initial jobless claims, all are just as important, if not more important, than, the Chicago. All the Chicago numbers are one of 7 sectors for purchasing managers to see how their manufacturer is going. We've got the Empire and we've got the Philly and there's 7 total, right? So with all due respect, as I take a look at the Chicago and I try to decide if what we're listening to on TV is bullcrap or not, April we were positive, May we weren't, June we went negative, July we went negative, we showed expansion in August, we showed contraction in September, we showed contraction in October. We were already expecting contraction. In fact, contraction was expected, or expansion was expected in September, and we showed contraction. So let me ask you guys a question. In the scope of things, how important is the Chicago PMI, or is it just a talking heads, don't know a damn thing TV point? What do you think? I love it. I absolutely love it. So let me go through. You don't need to. Jeffrey says Bloomberg article from unknown source saying China negative about POTUS confidential. You don't need to broadcast. Lance, it doesn't mean a bleep, bleep, bleep thing. That's a lot of, yes, that's a lot of bleeps. Kevin, doesn't look like it's really important. Kevin, probably something just to talk about on TV, not important. Agreed 100%. And going back to what Ida said, well, Jeffrey said, what Jeffrey said comes back to, and it doesn't quite go. In all honesty, I understand what Jeffrey said, but let me just make a simple comment. Where was the one? It was a Bloomberg, but it was that. All right, where was it? Let's do. It was basically saying that Trump's going to back out. It was so, I don't know. It was such garbage. I wonder if I'll have it. I wonder if I'll have it on my history here. Hold on one second. Let me see if I can find it and get it on my history. I just looked at it. So let's see if I can bring it back up again. Markets. So the short answer is yes, it was an article, and I thought it was kind of funny because the Fed is worried about Trump backing out, yet who backed out of the last trade agreement? Who had 160 pages done and they backed out of signing the last trade agreement? There you go. It was China. It was China. Let's see if I can pick it up this way. Can't find it out. There it is. So this is the one that they're worried about. Chinese officials say have doubts about trade deal possible with Bloomberg because of his impulsive nature, which he's always had, and him backing out. I don't buy it. Again, I don't buy it. More political garbage. So someone tell me what is really going on. And it's kind of funny because in all honesty, is Trump going to back out of a trade deal? Will Trump back out of a trade deal? No, of course not. What is he going to do? There you go. I see 3 no's coming in. What would Trump do? David and Lance, think about what we talked about last week. Or Mary, 2 weeks ago, I had a conversation with you. What would he do? What would Trump, there you go. He'd raise tariffs. He won't back out of a deal. He's just going to raise tariffs. So let me throw this out at you. And Keeve, you're not allowed to answer. If today is the last day of the month, what is happening with funds or trillions of dollars? If today is the last day of the month, can someone tell me what's happening with funds? Happens every single month. There's not a month that this does not happen. That's one way to say it. Rebalancing. Taking of profits. Churning. Selling. So then, what should happen tomorrow? Anyone can answer this one. So what should happen tomorrow? There you go. Buying back in. Good answer. I like it. I like where your heads are at. So, this is the thought. This is the thought. And this is the premise I'm going to go off of. Now, the question is going to be, well, Kevin, are you right or are you wrong? Is Jeffrey maybe right or am I wrong? I know a couple of you come from Jeffrey's class this morning. Is Bloomberg right or wrong? Kevin, why do you think you're better or smarter than Bloomberg? And my thought is, it's not a matter of being smarter or better. I just don't have a political agenda. I manage real money in the stock market. I don't talk about it on TV. I have a vested interest in how we do versus getting paid $500,000 to speak for a couple hours on TV. So if I was looking at what I would do today, I see the market's down 0.56. I'm down about a little less than 0.3, probably about 0.27, 0.26. I'm going to go to my winners. I'm going to go to what I think people will buy into after we've had an amazing run in October, one of the best runs in October history, right? I want to take a look at some of my winners today. Facebook, Newmont Mining, which is more of a gold silver. My big losers, Baidu, Bank of America, Target, Boeing, Under Armour, Zions, Visa, JP Morgan, Disney. Where am I going to get a bounce? Where would I get a bounce? And I want to give myself some time. So if I was looking at something that I felt comfortable, that I could say, hey, you know what? I can do it. I'm ready for it. Let's take a peek at it. There are two trades that followed trades Keeve talked about not too recently, not too long ago, very recently. In fact, if I can go through and take a peek at those, Keeve came up with some trades not too long ago. Keeve came up with a bull put for $1.10 credit. There is no reason why you shouldn't be getting out of this trade today, even though you still might have 8 cents still left. Even though it's trading at $10 higher, take your profit. Go take $1,040. Don't worry about the last 80. You just booked a 92, 93% profit. Go take a profit. Go book a great return on your Apple bull put. Disney. You should have been in for half of it. Go take your profit today. But Kevin, we only have one more day. We only have one more day, and Disney is above 128. So stay in it a day. Get your full 100% return. But a disciplined person would have taken their profits. Hey, Ford's not working out so well, Kevin. Really? I can't believe I heard that yesterday. It's a bear put. It's a bearish trend. You're profitable. Well, Kevin, I'm not sure how profitable I am. 29 cents to get in. Let's take a peek at it. Let's take a peek. Here you are given 3 trades you could do. And I'm going to again say with one of those, with all due respect, you're down at 32, probably get out at 34 cents, 5 cents on 29 is a 20% return. If you had set it how Keeve told you, you'd be out. And yes, you'd be profitable today. Not a huge profit, but you would be profitable today, and you could have had double the profit yesterday. So occasionally people ask me, well, why didn't you tell me? And it's pretty simple. Wow, if you did your overall long put just at 55 cents on Ford, That's the one that you'd be upside down on. But again, the question comes down to, why didn't you tell me? Teach a man to fish, and he feeds himself always. Right? Give him a fish, and he turns into a major pain in the ass. Think for yourself. And I know it's not this group of people. And I know I'm saying it for someone else that I talked to on my way into work this morning. It's kind of funny. I was trying to text one person and talking to another on the phone. Two things you shouldn't do when you're driving. But if you can't think for yourselves, what good are you going to be? If you can't think for yourselves, you have no right being in the stock market, let alone trading. If you can't think for yourselves, annuities were created for those type of people. And it's funny, I know I'm not talking to this group, and it's going to be for someone else that's going to watch this later on today. But I want to reinforce to the 13 that are here right now, keep thinking for yourselves. What you hear on TV, fact check. What you see in an article, go back and take a look at it and use your brain and see if it makes sense. That Trump's going to back out of a China deal? Who backed out last time after 160 pages of work? With all due respect, I don't pay any attention to CNN, and I'm starting to worry about Bloomberg. I know CNBC is slanted to make things look bad for our president, when I seem to have found a much simpler explanation on, we're in the last day of the month. Don't we always have a churn that happens the last day of the month? Don't funds move around? We have someone that has their hand up. Jeff, let me unmute you if you'd like to make a comment. See if I can get you unmuted. You're actually yourself muted. You've muted yourself. Or you can type in your comment, Jeff, and I'll read it to the group. We have Jeff Schaffner here with us today. Lance, Kevin, I agree with what you're saying. Sometimes it's hard to think for yourself when everybody else is saying something different. So yes, standing out in a crowd, I never said it was easy. But Lance, who cares more about your money than anyone else? You do. So I agree with you. If I was looking at a trade today, I'd follow the two that are making money. And I want to give myself plenty of time. If I was looking at a trade today, expecting a bounce higher here in the near future, knowing we're just going through some end of the month, I like Apple. I like Facebook. I'm following the trend. I'm a little worried about, well, Facebook has plenty of room to go, especially up to 200. Currently trading at 192, trade as high as 198 today. What an opportunity we have on Facebook. If I was going to do a trade on Facebook, I would want to give myself some time. I'm already in a couple of these. But if I was going to do a trade on Facebook, I would look at to June 20. I would buy a 200. Leap long call. And this would be my trade. I am following something that has stood in the face of political uncertainty and has killed it. I would be following this one in towards the end of the year. Great opportunity. It is a $45-ish $100 trade. I'm only doing 3 because if I'm wrong, I want to be able to dollar cost average. If this one is too expensive for you, you can get into something more out of the money at 230 for $6. And you can probably get in at 585. This one I could do more of. But all you're doing is following the trend, trying to make a run on this out to December. Either one works. Some good opportunities here. And I'm doing enough that I plan on dollar cost averaging once or twice if I have to. If I don't have to, I'm going to be okay. I do like Apple. And there are 2 possible trades on Apple, but you want to go on in the money to give yourself a cushion on both of them. I know Jeffrey was really short term. And I don't know if I agree with being that short term, but it makes sense. It really does make sense. If you want to give yourself a week, you could do a November 8th, 245, 275 bull call. $245, $275. $150 to make a dollar. It makes sense. It would be a quick hitter. It makes perfect sense. I get it. Well, Kevin, it sounds like you're doing a lot of hemming and hawing on it. And I am. All the numbers make sense. It's a quick hitter. It makes sense. Especially if my belief is we're just having a sell-off, then of course, yes, it's a perfect trade. But it's not necessarily my trade. I'd be looking more for a January. And I'm looking for, hey, it's getting beaten down. It has all this opportunity. There's plenty of upside potential on it. And I'll be honest with you, I want to make a lot more money. Everyone thinks I can get up to 280. I'm not sure I agree with 280. But if it can get halfway there to 265, I really like this one as a trade. And I couldn't do as many contracts. I'd probably only do 4. But here's one that I like. Gives me plenty of time. Gives me a good runway into Christmas. And I've got a maximum profit of $3,700 with $700 more risk. So I get 3.7 times more profit for, $700 of more risk. $660. Doing less contracts. So this is the one that I'd be looking for. This is the one where, even though I agree with Jeffrey Dunion's, all his numbers, I like where he's at. I want to be a little greedier. I want more real return. I want a better risk to reward. Instead of 1 to 0.66, I want a 1 to a 1.66. And I'm following the same premise that there's a lot of upside opportunity for Apple. So this is where I would go, and this is why I'd be doing it. Are there any questions that you guys have that I can answer for you as I put these trades in here and give you the opportunity to see these? Hold on one second. Nope, I'm good. Any questions that you guys have that I need to get answered for you? So I'm going to work on getting all these somewhat separated. Yeah, the one I would do would be an Apple January 20. And I would be looking at the I'd be looking at the 250, 265, the 250, 265 bull call. And the reason why I like this one over, and I'm going to give the safe option strategies, Jeffrey Dunion, which I agree with. November 8th, and we're looking at a 245, 247.50 bull call. And the reason why I don't like it as much is, 1, it's short term, and 2, I want to make some more money. Or obviously you could go longer term out there on Facebook. All right, hey, if I don't see any questions, I want to thank you guys for being here today. Trying to stall to give you guys the opportunity to say anything here. All right, hey, I don't see anything coming through. With that said, you guys have sounds good. I saw someone just type something in. So just as a heads up, if you do have long puts on Facebook, or if you're protecting Facebook or Apple, your decision is, do you take those off? And again, if you have long puts that are protecting stock ownership, then you definitely made more money on your stock. You did lose on your long puts, but you made more money on the stocks, so you're net profitable. If you have just long puts on Facebook, I would definitely take them off, because if you look at the chart, you will see that that it's bullish, and that it's been bullish for about 2 weeks, 2.5 weeks. So that those positions were probably not needed, or maybe not warranted. In which case, if you have any premium in it, you're taking your profit on it. Well, not a profit, but you're taking that premium and looking for another day to trade. Just a thought process that comes to my thought here. All right, guys. Hey, appreciate you being here. Look forward to seeing you in the next one. Have a great day.